I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, new data from two promising COVID-19 vaccines. Plus, President-elect Biden vows 100 million doses will be distributed to Americans during his first 100 days in office. We will have the latest with the U.S. now hitting more than 15 million cases. Plus, full speed ahead, the startup that is buying Uber's self-driving unit joins us on the deal that pushes the company's valuation to $10 billion. We're going to hear from the CEO of Aurora. And with dizzying market rallies, IPOs, and valuations, couldn't we all use some calm? We're going to talk to the co-CEO of the meditation, sleep, and relaxation app called Calm. Its valuation has doubled. How's that for a mental health break? Those stories in a moment, but first, U.S. stocks climbing to a record amid stimulus discussions, the S&P rising to an all-time high. Let's get to our Abigail Doolittle in New York to break it all down. Abigail, walk us through the day.
Well, it turned out to be a bullish reversal at the end of the day, Emily, because coming in this morning, there were pretty steep declines for the major averages. Interesting because, of course, today the vaccine was launched. Pfizer's vaccine started distribution in the UK, so you would have thought that there was a rally. Not the case in the morning, but by the afternoon, there certainly were record highs across the board. That NASDAQ 100 up for a 10th day in a row at another record high. Now, after hours, we do have two earnings movers to take a look at, Chewy.com and GameStop. Now, Chewy.com, they put up a pretty strong quarter. They beat estimates. They also boosted the sales view. Now, that is the sixth sales beat in a row. I think that shares had been higher. I'm not quite sure what's weighing on them at this moment. Their active customers increased, including myself. Great website there allowing you to order for your pets, and the results certainly proved it. Let's see whether or not the stock follows tomorrow. GameStop, on the other hand, they put up a disappointing quarter, missing sales. This stock up 180% on the year, Emily, so there was no room for any kind of problem, and they had a problem, and you can see that stock down 13%. As for the stocks that worked on the day, all of the big names. In the beginning of the day, it was really energy and some of the banks that were working. Tech was holding back this year's defense, but at the end of the day, Apple was the top point boost for the various indexes. Splunk did quite well. Tesla reversed from a 7% loss on the open, closing up 1.3%, extending its S&P 500 inclusion rally. This is they are raising more money, the third secondary offering this year of about $5 billion. Investors looking right past the dilution. And then Pfizer, the star, up 3.2%. As I was mentioning, their vaccine starting distribution today in the UK. And it wasn't just Pfizer that was higher in the day. Moderna, their vaccine is expected to be approved relatively soon and in use on the year. Take a look at that, Emily. At the beginning of this year, that was a $20 stock. It is now a $170 stock, up a whopping 768% this year on that vaccine. And it seems investors really want in on that technology, the optimism that it will be moving right through the world in 2021 in particular, Emily.
Absolutely, an incredible rise. Okay, Abigail Doolittle, thank you so much for that breakdown. Talking more about vaccines now, U.S. officials say they will have enough COVID-19 vaccine doses to let most Americans get inoculated by summer. The Trump administration is downplaying reports that it passed up a chance to secure more of Pfizer's shot. The government signed a deal last summer to obtain 100 million doses of Pfizer's experimental vaccine, enough for 50 million people. The U.S. also has agreements in place with Moderna, AstraZeneca, Johnson & Johnson, and others. To discuss, we are joined by Bloomberg's Michelle Cortez. Michelle, big news for Pfizer today ahead of the meeting between FDA officials and Pfizer that's happening later this week. We got an FDA staff report that says the vaccine is safe. What can you tell us?
Well, what we are finally seeing now is the details of the Pfizer-BioNTech trials, and they are absolutely meticulous in terms of how people responded to the vaccine across different age groups, across different ethnicities, across different comorbidities. And honestly, Emily, what we're seeing at this point, everything looks great. More than 90% efficacy across the board, every group that they looked at. The number of serious and severe virus infections was very low. Only a handful of people were infected. The people who did get infected after getting 2 doses of the vaccine, almost all of those came within the first few days after getting that second dose, which indicates that if people do stay safe right after those first couple of days, you could get to an even higher protection level. So it's all really great news across the board. Of course, now what we're looking at is getting a final review from the FDA advisory committee hearing. That's going to be more than a dozen experts who are going to comb through these details specifically, see if there's any other hurdles that the rest of us have missed. And then we got to roll it out.
We're also getting new details from AstraZeneca. You've got Johnson & Johnson and Merck potentially on the horizon. How does the UK rollout impact U.S. access to the vaccine?
Well, we are now hearing, of course, about how Pfizer did offer to the U.S. to get more of the vaccine for the U.S., where the Trump administration didn't want to go down that route. They are, they're spreading out the buy a little bit more broadly. And then we saw countries like the UK and other places have snapped up those Pfizer vaccines. So when we're looking further down the line, perhaps in the summer is when the U.S. would be able to get more of those doses. So as long as the other vaccines do come along and get approved and have successful trials, we should be fine. But with the rollout in the UK, it does show that some of those doses are being taken by other countries. Also in the UK, they're rolling it out first. There are going to be tens of thousands of people who are going to be getting it. Should anything crop up unexpected, it'll most likely appear there first. So it is a little bit of a front runner for us.
So how promising are some of these other companies looking, AstraZeneca, Johnson & Johnson, Merck, at this point?
Yeah, we're still waiting for data from all of those companies, but they all do bring something a little bit different and better, right? Potentially better. Johnson & Johnson and Merck, they just have one shot, so you don't need to wait for your second shot. They're easier to deliver. You don't need that super cold chain delivery system, but also we don't know how they're going to hold up. We don't know if they're going to have that 95% efficacy, which is what we all really want.
All right, Bloomberg's Michelle Cortez, who covers healthcare for us. Really interesting detail there. And of course, it's only the world depending on it. Thank you so much, Michelle, for that update. Coming up, the self-driving car industry has a new giant. Uber and Aurora are joining forces in a new deal, competing with better-funded rivals like Alphabet's Waymo. Aurora CEO and co-founder Chris Urmson, who helped start Waymo, joins us next. This is Bloomberg. Uber has sold its self-driving car unit to Aurora Innovation and taken a 25% stake in the startup. The move shows that the ride-hailing service decided to pull back from its vision for a fleet of autonomous taxis to focus on turning a profit next year after the pandemic took a toll on revenue. Sources say the deal, valuing Aurora at $10 billion. For more, we're joined by Aurora CEO and co-founder Chris Urmson. Chris, Uber has hundreds of engineers, but their self-driving unit is burning something like $500 million a year. Why take that on? What does this deal do for Aurora?
Well, we're really excited about this. We know at ATG there's this incredible team of people that have been working heads down for the last number of years. It's a group that has incredible determination and grit to see this technology in the world. Meanwhile, Aurora, for the last 4 years, we've been building our company. And by putting the team together, by putting the technology together, and then having the special partnership that we will with Uber, we're going to accelerate our product coming to market and be able to deliver the benefits of safer roads, more efficient roads, and make it more accessible and less expensive to get around. So, this is incredibly exciting for us.
So give us a snapshot of where Aurora's technology is at right now in terms of basically replicating the driver and getting self-driving cars on the road.
Yeah, so for Aurora, we're building the Aurora Driver, which is a platform, a capability to drive any vehicle from a big Class 8 truck through to a small compact electric vehicle, perhaps for ride hailing. Our driver is a combination of the software that understands the world around it and how to move through it safely, the hardware that runs the algorithms and allows us to see the world, and then, of course, the data services that enable that. And so we've been working at this for 4 years. Our first product is going to be in trucking and freight. So imagine the big semi-trailers that you see down the road, powered by the Aurora driver, helping get goods from one place to another.
Are you actually in talks with parts of the commercial trucking industry? I mean, are you close to any particular deals?
Well, we don't have anything to announce today, but we do work with and talk with folks throughout the industry, yes.
So let's talk a little bit about valuation. Amazon just bought Zoox for a reported $1 billion in June. What makes Aurora, given that you are still working on this, though there is a lot of potential, what makes the company worth $10 billion?
Well, I think that if you look at the team that we've put together, the leadership, the understanding that we have of the problem, I think that we have confidence we'll be one of the few companies that actually is able to cross the line and deliver a safe, capable product that can help deliver on the promise that we've been talking about for the last decade around self-driving vehicles. I think the way we're approaching the problem, whether it be through our virtual testing suite or the way we've architected the driver, is really taking kind of a next generation approach to solving this. And we think that that means ultimately that we'll have a capability that no one else will be able to match. And that'll lead us through through to market. And then with relationships like the one we're building with Uber now, we'll have a clear path to market. And we'll be able to work in partnership with folks who provide vehicles and those who need vehicles to run their businesses to really accelerate and improve the quality of transportation and the safety of transportation. And when we look at the transportation industry writ large, this is a $3.2 trillion space just in the United States. So if you believe want to have an opportunity to play, then you're going to look for is focused on the mission of delivering this technology and has the best team in technology. And I guess people seem to believe that's us. So we're really excited about that.
Your co-founders worked at Uber and Tesla, and you helped start Waymo. This might be what you have now, the biggest threat to Waymo yet. And you know better than almost anyone what their strategy is. What do you have on Waymo? How do you differentiate yourself from what they are also trying to offer?
Yeah, I think we really focus on what we do, right? And that is create the best place for people to work on this technology, provide clear leadership and a mission that people believe in, and then move with urgency to see this technology in the market. We have a ton of respect for everyone working in this space. It's a really hard problem, and it's such an important problem that we need multiple teams to work on it. But we have deep conviction that we're going about it the right way and are going to ultimately win and have a big part to play here. So, yeah.
Now, I know you only want to talk about what Aurora is doing, but it's what's interesting about it is that there are different companies taking different approaches. So, for example, Tesla is taking a camera-only approach to self-driving technology rather than the way the rest of the industry is doing it, using the LiDAR sensors, the radar. Could Tesla beat Aurora and Waymo potentially with self-driving cars to market?
We believe really deeply that safety is essential in getting this technology to market. And to operate these vehicles safely, you need to see the world clearly around you. And our approach is to use not just one sensor, but a combination of different sensors, because each of them provides different advantages and is going to fail in different ways. And so, for example, last year we acquired a company in Bozeman, Montana, that's developing a really innovative form of LiDAR that allows us to see further than anyone else and allows us to react more quickly than anyone else as we're driving at speed down the freeway. We think that kind of innovation is the type of innovation that unlocks this technology, actually making it to market for real and doing it safely. And so without those kind of breakthroughs, without that type of combined holistic approach to it, we just don't think it's ultimately going to be viable.
So tell us a little more as you plan your business model. How will you make money? How much will you charge for this technology?
Yeah. So the product Aurora is going to bring to market is the Aurora Driver. And what that does is it operates vehicles, whether they're, when they'll initially be big Class 8 heavy duty trucks and ultimately all kinds of different vehicles. Our model is to get paid based on the usage of that vehicle. So you can think of the parallel I would think of is in the aviation industry. If you're an airline, you lease an aircraft from somebody, or you effectively buy it from a Boeing or an Airbus. And then you also select the engine that goes into that, whether it's a Pratt & Whitney or a Rolls-Royce or a GE. And the airline then has a relationship where they buy the airframe from the airline manufacturer, and they continue to pay for basically throttle by the hour for the airline. And so we think of ourselves in that equation as kind of the engine. And so we look for this recurring revenue business over time, and we're excited about that and the opportunity to partner with organizations who really understand their business. And it means that we can focus on what we do best in the world, which is build the driver.
So where do you think regulators will fall on this? We're going into a new administration. Of course, there are regulatory issues and continued safety concerns. Do you see a world where state and federal regulators are going to allow commercial deployments in the near future?
Absolutely, right. I think if you look at the promise to save lives on America's and ultimately the world's roads, it's a no-brainer, right, that we'll get there. And then when you look at further the economic impact that this can have and the opportunity to make transportation more equitable, to decrease the cost of it, to ultimately in the long term revisit the structure of our cities and make them more livable, it's clear that this is a social win. And as I've engaged with regulators over the last decade, they understand that vision, and they also understand their obligation to help protect the American public. And my experience has been that they're going to be thoughtful and enable what's a life-saving and essential technology for us in the future.
Do you see more consolidation in the industry, and do you want to be a part of that, or do you see Aurora being a public company someday?
Well, I think we are a part of it. We're excited about that. Yes, I believe since we founded Aurora that this industry is going to consolidate. It's a new technology. It's completely appropriate for there to be a bunch of different companies trying things out and exploring the space. But over time, the market's going to dictate which ones will continue and survive. And as Aurora is an independent company, we think that's an incredible opportunity. And so we'll continue to build the company. But really for us, it's about delivering our mission. And our mission is to deliver the benefits of self-driving technology safely, quickly, and broadly. And so when we make a strategic decision like this exciting acquisition of ATG, does that action accelerate our mission? Does it make it more likely to get where we need to go?
All right. Well, we'll be watching to see how it plays out. Certainly a big deal for you. Chris Urmson, Aurora CEO and co-founder. Good to have you back on the show, Chris. Thank you. Coming up, Tesla is raising up to $5 billion in its third offering of the year. We're going to look at Musk's next moves and what it means for spending next. This is Bloomberg. Tesla is taking advantage of its surging shares this year by going back to the capital markets for the third time in 10 months and raising as much as $5 billion of common stock. Joining us now in San Francisco, our Bloomberg Deals reporter, Ed Ludlow. So, Ed, tell us what this means.
Well, Tesla has a big to-do list for 2021. It's building 2 new factories on 2 continents, one in Germany, one outside of Austin in Texas. It wants to grow its Shanghai plant. And the automotive industry is a capital-intensive industry. It doesn't matter if you're building a gas car or an electric vehicle. It takes a lot of investment to get the assembly lines going, get talent, get the raw materials. And as you know, Emily, Tesla might deliver 500,000 vehicles this year, but it wants to be delivering 20 million vehicles annually by the end of this decade. That kind of growth growth takes serious capital expenditure. And Tesla, we know, already plans to spend up to $6 billion over the next 12 months. So this really shores up Tesla's finances, puts them in a healthy financial position to execute on the plan that Elon Musk has been outlining all year.
Now, in perhaps even bigger news today, Elon Musk has announced that he has moved to Texas. We know that Tesla has big plans in Texas, but tell us what you know.
It's hard to know what the reasoning behind it is. At the height of the pandemic earlier this year, Elon Musk was very critical of authorities in California, here in the Bay Area and more broadly, over their handling of the coronavirus and the kind of restrictions they put in place on Tesla. At the same time, Tesla has big plans, as you say. The Austin plant is where they're going to build the Model Y and the Cybertruck, this great futuristic pickup that's coming to market. And we know that also Elon Musk is a very hands-on manager. We hear that all the time from Tesla, people within sources within Tesla. He micromanages, he makes decisions himself. He likes to be where the action is. He spends his entire life on his private jet going between Germany, Shanghai, and the different US sites. But Austin's important. They're going to spend $1 billion to make this 5 million square foot facility, and he wants to be in the thick of it, as well as near to SpaceX, because in Boca Chica, that's where SpaceX is working on its Starship for future human flight into space. And that is another area that Elon Musk is very hands-on as well. So that's a big part of the reasoning. He speaks very affectionately about Texas, and he confirmed today that's where he's moved to.
So what are you watching as we approach Tesla's inclusion in the S&P?
Yeah, there's been this big focus on profit, and recently we know from the memo that Bloomberg reported on, Elon Musk has told his staff to cut costs, focus on penny pinching. But 2021's a big year for growth. New products like the Cybertruck coming online, the Tesla semi-truck, things we've been waiting on for years might actually be delivered to customers next year. And then there's this growth story. It really is about whether Tesla can pull it off and build this factory in Austin, build this factory in Germany, because then they can start really raising those annual delivery numbers. 500,000 vehicles isn't that many in the context of Toyota delivering 10 million vehicles every year, Volkswagen delivering 10 million vehicles every year. It is the leader, the incumbent in electric vehicles, but in the scheme of things, it doesn't deliver that many, and we know that growth is top of mind for Elon Musk as they approach the next 12 months.
All right, growth and a mid-country move. Ed Ludlow in San Francisco, thank you so much, Ed, for your reporting there. All right, coming up, the market is looking at some major IPOs this week. We're going to take a look at DoorDash and what to expect out of tomorrow's expected listing. That is next. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang in San Francisco. The IPO market is looking to go out with a bang, closing out the year with two big debuts, DoorDash and Airbnb, preparing to go public this week, with DoorDash upping its price range to reflect positive investor sentiment and making it one of potentially the 5 biggest IPOs of the year. With me now, D.A. Davidson analyst Tom White, who covers DoorDash and has a $93 price target on the company. So look, Tom, DoorDash raised money at like an $18 billion valuation over the summer. Now they're looking at a potential $35 billion market cap. I know it has grown, but is it worth that much?
Yeah. So first off, thanks for having me, Emily. Appreciate it. Look, I think at the time of the last raising, between then and now, yes, the valuation has expanded significantly, but the business has expanded even more. DoorDash grew its revenues 268% year over year in the third quarter. It's already the largest player in U.S. online food delivery, but it's also growing the fastest by a wide margin. And technology investors generally will pay a premium multiple for growth, and it looks set to happen again here with DoorDash. And one thing that I'd also add is there's been a lot of investor focus and debate around kind of will these valuations or will these online food delivery stocks kind of come back to earth a little bit on the other side of the pandemic. And I think to some degree you will see growth rates normalize, certainly, but DoorDash had a very strong established trend of gaining market share pre-pandemic. It has certainly done that during the pandemic, and we think on the other side of this, they'll be able to maintain their leadership position and probably continue to take share.
What about the relationship with restaurants? Bloomberg has done some reporting. Other outlets have reported on this tense relationship with the restaurant industry, restaurant owners complaining about up to 30% commissions. Obviously, if they can get more restaurants on board, then the odd complaint doesn't matter, but it does when it's a large part of the industry.
Yeah, certainly. Look, I think during the pandemic, I think you've seen a cooling, if you will, of that relationship. Restaurants, I think, have turned to these food delivery platforms, embraced them a bit more, just given that they're relying on them to basically get exposure to diners and consumers who are maybe holed up in their homes. On the other side of the pandemic, I do expect you're going to, probably see sort of a return to some of the rhetoric and some of the debate around sort of how healthy these platforms are for local restaurants. Even during this pandemic, we're seeing across a handful of cities in the U.S. The implementation of caps on the commissions that the food delivery platforms can charge to restaurants. Most of those commission caps are temporary. I do have some questions or some concerns about how temporary is temporary, particularly if on the other side of the pandemic unemployment remains high, the economic kind of recovery is not super robust. Those commission caps could last for a while, but I think certainly during a pandemic like this, the online food delivery platforms are really showcasing to the restaurant industry how they can help and help provide a lifeline, if you will, to consumers.
Let's say DoorDash has 50% of the market right now. Where do you see that number in, let's say, a year, and where does the growth come from? Is it more from the suburbs? Is it more from the cities? Do they take share from some of their competitors?
Yeah, so it's a good question. I mean, if we look out 2 or 3 years, we think that the U.S. online food delivery market is probably sort of a 2 to maybe 3 horse race, that there's probably going to be 2 or 3 large companies who are operating here. And to be honest, that's basically what we have today, given some of the recent consolidating M&A. DoorDash is at 50% share. The bigger you get, the harder it is to kind of grow at outsized rates. But given that just this last quarter, their growth rate was basically double that of their next fastest growing competitor, it does seem like DoorDash can continue to kind of tick up their category share north of 50%. Does it get to 80% plus? I doubt it. In a lot of the other kind of sectors of my coverage universe, where I follow online marketplace type businesses like this, maybe in sectors like online travel or something like that, you rarely get a winner take all type market. So I think their share can continue to tick up. I don't think they get probably north of 80% or maybe closer to 70% is maybe an aspirational goal. And then, you've got 2, maybe 3 players overall in the market.
Interesting. You also follow Uber, and I'm curious what you make of Uber's selling their self-driving car unit to Aurora. We were just speaking with Chris Urmson, the CEO of Aurora, a few minutes ago, taking a big haircut on the actual sale, but then tying themselves into, a potentially, future successful self-driving car company.
Yeah, look, I think it's another example over the last kind of 8 to 12 months or so that highlights Dara's willingness to make the really hard decisions when it comes to simplifying the business, streamlining the business, and sort of accelerating the timetable for cash flow creation and profitability. And, a lot has been made of some of the asset sales or sort of shutting down of businesses that Uber has done over the last 8 to 12 months. But, on the flip side, they've also made some acquisitions. They acquired Corner Shop. So, I sort of view it as Uber kind of streamlining and focusing, not necessarily looking to get smaller in their core businesses of ride sharing and food delivery, where they're going to continue to invest. A Corner Shop is more of sort of an adjacency to food delivery, obviously, but the company is refocusing, streamlining, but it also is continuing to invest in the markets where they're either a clear number one or number two leader, or they see a very imminent path to being a number one or number two player. All of the other markets, all of the other kind of longer term opportunities or shots on goal, are held to a much higher standard in terms of payback period, return on that investment, and I think that's what you're seeing with the decision around ATG.
All right, Tom White, D.A. Davidson, thanks so much, Tom, for that analysis there. Of course, we'll be following DoorDash's planned IPO tomorrow. Meantime, we do have some breaking news. Treasury Secretary Steven Mnuchin has said he has pitched a $916 billion stimulus package to House Speaker Nancy Pelosi. This is the first move by the Trump administration to break a months-long stalemate on stimulus plans. Mnuchin saying in a tweet, a statement that he tweeted, that he has spoken with Republican leaders in Congress about the plan, as well as President Trump. Of course, President-elect Joe Biden has said this new plan would only be a down payment on more money to come next year. We'll continue to follow those negotiations. All right, coming up, 2020 has been a tumultuous year for, well, everyone. And many have sought help from the Calm app to meditate, relax, and hopefully even get some sleep. We're going to hear from the CEO and co-founder of Calm about how these anxious and trying times have propelled the company to new heights. That is next. This is Bloomberg. Fell asleep right there. You want to hear more of that? That was an 8-hour-long video with nearly 6 million views by Calm, the maker of a meditation, sleep, and relaxation app. As 2020 has become a year defined by the COVID-19 pandemic, economic upheaval, racial injustice, and a contentious U.S. election, Calm has seen growth like never before, with daily downloads doubling since March from people trying to find their calm. The company is now valued at $2 billion after a new funding round. Many celebrities, including Priyanka Chopra, Kate Winslet, LeBron James, have lent their voice to Calm to narrate stories. Joining us now for more, Alex Tu, co-founder and co-CEO of Calm. Alex, thank you so much for joining us. Talk to us about the trends that you are seeing in user behavior. What are people coming to Calm to find these days?
Yeah, well, obviously this year has been incredibly stressful for pretty much everybody in the world. And, Calm has seen a huge uptick in usage. As you mentioned, we've had, double the installs this year, double the downloads. And it's really quite interesting to see the whole broad range. Some people are coming to deal with anxiety and learning meditation. Other people are using sleep stories to help them fall asleep at night. So it's really the full offering that Calm, has been used by so many people.
You've seen 100 million downloads. Can you give us any more information or more data around retention, around engagement?
Yeah, we don't break out like sort of specific figures, but all of those metrics have kind of moved up and to the right during this, kind of crazy year. So we've seen, record numbers of subscribers. Our conversion rate has gone up. Engagement has gone up significantly. People are using Calm more often each week. And it's really been great to be there as a support for, the millions of folks who need it.
Now, this new funding round involves Lightspeed, TPG, Goldman. What other kinds of coaching and features are you looking to bring to the app?
Yeah, so we're always experimenting with new things. We've just recently introduced a fourth pillar of content called Wisdom, where we are trying to share the sort of world's best wisdom from teachers to help people with their lives. We're also very interested in coaching, so matching humans with other users to help them deal with their mental health. And then the big sort of growth area this year is Calm for work. So many companies are now buying up Calm to bring to their employee bases, and we have hundreds and hundreds of companies now offering Calm to their employees. So that's an exciting growth area too.
Speaking of growth, I've noticed advertising for Calm everywhere, and I'm curious, how much are you investing in marketing, and are you seeing the return on that investment?
Yeah, we are. We do spend a significant amount. We advertise online. We do a lot of paid media, Instagram and Facebook and Google and everything. But we also love to be really creative. So you might have seen on election night, we sponsored some of the news channels like CNN and their key race alerts. And that juxtaposition of these important election results coming in with a reminder to be calm, got a lot of additional kind of virality. And so we love doing things like that are a bit creative and a bit different. We also have, done some successful billboard campaigns. We have a Times Square billboard, which we are using as a sort of gathering place almost to find moments of mindfulness. So we really do kind of take creative marketing really seriously, and it's been really successful for us.
I did see the ads on CNN. I've seen the billboards in the Bay Area. I'm curious, my producer Mallory uses your app to fall asleep every day. She uses the free option and was wondering, are there more features coming for free, or is the main goal to keep driving people to pay for a subscription? Yeah, so subscription is very much our sort of core business. This year, we have made a lot of our content free online on a page, calm.com/together, and there's no sign up or download required. And we did that to really help, all the millions of people who, are sort of needing the support. So, we love doing things like that. I think in the app, we're very much focused on subscription revenue. But then, with the sort of growth of our business, Calm for Business line, we want to bring Calm for free to more people when it's paid for by an employer. So maybe Bloomberg would be interested in getting a subscription for your producer. Thank you. We will explore that. Are we going to see any new, obviously I know Ashton Kutcher was influential in the early days. You've got a lot of celebrity endorsements. What are we going to see in 2021? Any new celebs joining the platform?
Yeah, lots of new celebs. We love working with talent from many different types of entertainment. It really helps kind of spread the message of mindfulness. We're also really excited about leaning into kids content. So you're going to see us working with some of the best kids IP out there and creating all sorts of great meditation and sleep content for kids. So yeah, watch this space.
That's really interesting. As a mom, I will look out, and a mom who needs a lot of sleep, more sleep. Calm co-founder and co-CEO Alex Tu. Alex, thank you so much for joining us.
Thank you.
Okay, still ahead. Apple taking another bite out of the market for accessories with the launch of its first over-the-ear headphones. But wait until you see the price tag. We will discuss next. This is Bloomberg. JD Health surging in the largest stock market debut by a healthcare firm in Asia. Investors choosing to look past increasing regulatory scrutiny in China and betting that demand for online medical service will only continue to grow post-COVID. JD Health CEO Xin Lijun spoke exclusively with Bloomberg's Tom McKenzie.
Hong Kong's capital market is mostly similar to that of the mainland. Its understanding of healthcare is also similar, as China's system is very different from foreign ones. And each country's healthcare industry is relevant to their government policies. That's why we think listing in Hong Kong is a good choice.
How are you going to prioritize putting the capital that you've raised through the IPO to use for the business?
First, we will focus on strengthening our core business. For example, our supply chain, which still has room to improve, even though we are the largest retailer in China's healthcare sector. Secondly, we want to connect our online-offline medical services as soon as possible. Third, we want to have some cash reserves. It's good to have cash at any time, in case of any difficulty.
另外一个呢，我们可能会在我们整个核
In
心
addition,
领域的一
we
些
want to
生态
improve the ecosystem of our core
方面做一些
business,
积极的布局
including
投资
investments or
或者是做
acquisitions.
一些企业做整个医疗健康产业的生态布局。
How has the pandemic impacted the online healthcare business here in China?
从长远来看，对所有的在线医疗领域的企业
From a
都是一个
long-term
巨大的推
perspective,
动。
the pandemic has pushed the healthcare
老百姓
industry
的
forward.
中国老百姓的
A lot more
线上医
Chinese
疗
people
的
are now
比例 participating
participating
大幅度
in
提高。
online medical services.
中国已经进入一个疫情防控的常态化。但是
China has
线上的
entered the
恢复
normalization
线上的
of
咨询
epidemic
线
control.
上的服务
But online medical consultation won't decline as the epidemic peak comes to an end, which means consumer behavior has already been profoundly changed.
医疗习惯、健康习惯被深深的改变了。
What is a realistic number? What is a realistic target in terms of user numbers by the end of 2021, for example?
我的意思说，就是从
From my perspective, we're very likely to have more than 100 million users.
Well, let's talk about competition then. It is a very competitive space with the likes of Alibaba Health and Ping An Good Doctor. How do you differentiate yourselves from your competitors here?
相对于整个产业，我们这三家都非常非常小。
Compared to the entire Chinese healthcare industry, all the three main players are very small, and we are all trying to change consumer behavior. In light of this, we are business friends on the same mission of encouraging users to use medical services online. We are not necessarily competitors.
我们不一定是竞争对手。
How do you think the new antitrust laws that China is working on will impact the country's tech sector longer term?
每个行业的判断的标准是不太一样的。
Each industry has different
行业领
criteria.
先地位的
Companies
这个企
leading the
业
industry
是
can
一
be
个
innovation leaders, but can also be the monopolist who curbs innovation. It's possible.
推动者，但也有可能成为这个行业的一个。
Of course, it's necessary to establish standards at government level to define innovation and monopolies, and we welcome any reasonable government regulations.
健康产业来讲，中国有超过10万亿的健康。
China's healthcare market is over $1.5 trillion, but JD Health, even as the number one player, is only $1.5 billion. So it's very hard to monopolize the healthcare
所以
market.
呢，在这个行业里面，要形成垄断是非常非常艰难。
That was Xin Lijun there, CEO of JD Health. And we're getting more details on the new stimulus proposal that Treasury Secretary Steven Mnuchin has presented to House Speaker Nancy Pelosi in the first move by the Trump administration since Election Day to break a months-long standoff. Mnuchin saying in a statement that he has conferred with Republican congressional leaders on the plan, as well as President Trump. He said that he spoke with House Speaker Pelosi just in the last hour. We're also hearing from House Republican leader Kevin McCarthy that the proposal contains $600 checks per adults. Earlier, the checks were going to be as high as $1,200. We're waiting for more details on who exactly will be receiving these checks or eligible to receive these checks, but certainly progress there in the negotiations on getting a package done before the end of the year. All right, switching gears now. Apple launching its first over-the-ear headphones, entering a competitive market dominated by rivals like Bose and Sony. The AirPods Max marks yet another push by Apple into accessories to supplement revenue generated by the signature iPhone. Joining us to discuss who else but Bloomberg's Mark Gurman, who of course covers Apple for us. So what do we know, Mark, about the headphones?
Hey, Emily, thank you for having me. I mean, these headphones are retro-looking. They're made of fabric, plastic, aluminum, and stainless steel, and they cost $550. That's what's getting the most headlines today, is just that price point. You know, compared to the highest end of the market for headphones, you know, this is up there. It compares favorably to some other headphones from Sony and Sennheiser and others, but for a product that is geared towards mass consumers, given it's from a consumer tech company like Apple, it's a high price.
Well, given what else is out on the market, how does $500+ compare?
Yeah, I mean, it compares well to the high end of the market, right? But Apple isn't a company that's traditionally known as going to the very high end of the audio market, right? This is something that's fairly new to them. So I think it's going to take some time for people to grasp that price point. It's also to be seen how good these actually sound, right? So if we start getting these this week, next week, and start listening to them and comparing them to other headphones and they compare favorably, perhaps that price will be worth it. But nonetheless, $550 is a lot of money during a pandemic for headphones.
Absolutely. All right, Bloomberg's Mark Gurman, thank you so much for that update. And that does it for this edition of Bloomberg Technology. We're continuing to follow this new stimulus proposal that Treasury Secretary Steven Mnuchin has presented to House Speaker Nancy Pelosi, $960 billion in COVID relief. It would involve, as we understand it, $600 checks to Americans. We're still waiting for more details, but House Leader Kevin McCarthy saying that he will support this as well. We'll continue to follow that going into the next hour. Bloomberg Daybreak Asia coming up next.